Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, April 17th at about 3 p.m. Eastern. Well, the stock market opened to sharp gains this morning after Iran's foreign minister announced that the Strait of Hormuz will reopen to all tanker traffic for the remainder of the ceasefire period, which, by the way, ends on this coming Tuesday. The S&P 500, the NASDAQ Composite, both quickly notched fresh all-time intraday highs for the third consecutive session, while strength on the broader market has the Dow Jones seated with an even wider gain. And on that good news, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $709.27, very, very close to its intraday high, right at the new all-time high, all-time closing high today for sure, after gapping up last week and today even higher again on news of the Strait of Hormuz being opened up to traffic. And of course, now we're way above the highs set that we dabbled with for so long here in January at 697. Those were the highs, as you all know, for the past few months. This is kind of unusual. It looks like every April we get a plunge, right? And then and then a move straight up. A move straight up, which is pretty close. It's not straight, but it's pretty darn close to straight up this time. Of course, now the SPY is trading above its 200-day all of them, the 20-day moving average, which is the red line here, coming in here at 666 and change. The 50-day, the green line, which is coming in at 674.97. We could probably call that 695. And the 200-day moving average, and the 20-day is covering up the 200-day, the black line right here. So the 200-day is coming in here at about 667. We know that we can't see it on this chart, but we know since a year ago in April, the SPY has been climbing in an uptrend from those lows at 481 last year. And for most of that time, pretty much all of it, for the past year, the SPY has been walking up its 20-day moving average in a really glorious uptrend until it hit back here, these October highs right here. And you can see even back in October here, a big red candle. So it just finally down below its 20-day, it jumped right back up, hit the all-time highs in October, and then rolled over and came back down here to about, what do we have, 652 in November, was about 653 in October. So this was the signal that the uptrend, after going up 44% from the lows last April up to this high right here, we in 690, we know that it started losing a little bit of its steam right here, this uptrend, then finally climbed up to 696 and 697 in January here, and then started looking like we're getting a top on this finally on this uptrend, which is totally and completely normal. We were going sideways again in January and February at the 697. We started then having it go sideways instead of higher lows, and the SPY started going sideways here. Then when the Iranian war hit, then we rolled over here and fell down here to this low right the end of March at 629. So that was the low here. Then it rallied in a really, really almost parabolic move here up to where we are now at 709 and change. So now, again, we're glad for this uptrend. We have the round behind us, the top, what appeared to might have been the rounding of that really, really strong uptrend. But in falling down, we got a massive rebound here. And now we don't have, looking at this for fresh information, we don't have any resistance here. I guess the little high today could be thought of it, but we don't really have any resistance here because we're at all-time highs. There's no price patterns or indicator patterns that that can mark an exit for us here. So in the short term here, I mean, it's been lots of fun and glad for it. In the short term, it's getting a little toppy. You can expect some traders to take profits. No real resistance here. We do have potential support, price support back here at the all-time highs at 697. Then down here we have the 50-day moving average. Remember those lows here, the 676. So now we've got the 50-day moving average, the green line, coming in at 675 for all the world, and the this price support line here at 696. So that's potential support. Then on down to the 20 and the 200-day moving averages. We're coming in here at about 666, 667, and on the way down. So anyway, as we are headed into earnings season, first quarter earnings season, in this coming week and for about the next 3 weeks, please make sure to trade extra carefully. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including of course, all of the large cap momentum stocks, and we're talking the Magnificent Seven, that whole group. Now, when I captured this chart today, the QQQs were trading at a new all-time highs at $648, and at that moment, 16 cents. New all-time high, above, of course, the prior all-time high that had been in October and January, touched back then. That was at 637. So that was our those were our past all-time highs. And now we're up here to 648 and counting. So we're of course, when you go straight up like that, you're going to be way above your moving averages because they don't have time to catch up. So we've got the 20-day, the red line down here at 597.97. So just call that 598. We've got the 200-day moving average down here at 598, and we have the green line, the 50-day moving average here at 602. So these lines are pretty much all together, but looking bullish now with the 20-day looking like it might be able to cross up over the 200 and then hopefully up over the 50-day. So now we know, can't see it on this chart, but we know from last year's April low, the Qs were trading at 402 at that low, and from 402 for practically the entire year up to now, April, the Qs have pretty much walked up like the SPY, walked up their 20-day moving average. Actually, from its lows, the Qs lows at 402 up to the October all-time high back here, it was a 58% rally. So we're, as if things are acting reasonably normally, we go, all right, 58% up, you're probably going to need to take a rest here. And just like the SPY made these two great big red candles here in October and November, so did the Qs do the same thing. Gap up and close on the lows. That's what these great big red candles are. So, but it did rally. That it dove down to 585 in November. The Qs then rallied and then consolidated and started moving along sideways along the 50 and 20-day moving average, trying to take a swipe at that prior high, which it did. It came back up here in January to 636. So we had this very, very shallow, what turned into be a kind of a double top here. But of course, when you're back in December, January, February, we didn't know exactly what was going to happen. So again, it started going sideways, fell down here to 594, started consolidating beneath its 50 and 20-day moving averages. Then news of the war hit, and the Qs dropped down to the March lows here at 555. Now, from that 555 low down here a couple of weeks and change ago, all of a sudden, kaboom. Of course, these are the tech stocks. These are the drama kings and queens. It went practically straight up to where we are now, again, at 648 and change. Again, we have no overhead resistance here to pay attention to. We have potential support here at the prior highs at 636, 637, right along here. Then down to these highs right here. Were these lows, these highs, these lows. So what was support became resistance. So this is like 617 or so right here. Then we have down here the moving average zone at 597 to 602 and on down. So again, with earnings season, especially when it comes to tech stocks, you got to be very, very careful. Just if you're going to get into a new position in the tech world, I would advise you to do a little research and find out when their earnings are going to be announced, because that, as you must know by now, can send the price of a stock up a lot higher or down a lot lower if it wants to. So be careful with earnings here. Our final chart today is a chart we haven't looked at in quite a while. It's a daily chart of the iShares U.S. Home Construction ETF. The symbol is ITB. Now the ITB has 46 holdings. Top holdings include D.R. Horton, Pulte, Lennar, Toll Brothers, Sherwin-Williams, and Lowe's. Lowe's, you know who they are, like Home Depot. When I captured this chart today, right here, when I captured this chart today, the ITB was trading at $97.96. Is trading above the red line, the 20-day, which is coming in at $92 and change. It's just below the green line, the 50-day moving average, which is coming in at 99 and change. And the 200-day is up here overhead still. Yes, it is, at $102. So we do have these moving averages to work with, but of course, during the during the war, and before that, when they kept saying we're not going to get any interest rate relief, that news came in and knocked the ITB down. However, that kind of news is reversed a little bit in the last few days. So looking up here at this chart, the ITB made a recent high up here in February at 114. And at that point, it rolled over really, really hard. It rolled over really, really hard and dove on the uncertainty of the war with Iran down here to lows in March and April at 87. So down here to these lows at 87. Then it sidestepped for a few days and then rallied to where we are now at $97 and change. So what I'm thinking here is that if interest rates come down, and it looks like it's possible now, that will be very bullish for the housing industry, as you probably already know. So I'm going to keep an eye on this. If in the coming week, if the ITB can stay above 92, which is basically this 20-day moving average. So if the ITB can stay above 92, and I realize it's up here at 99 right now, but if the market's at all toppy, who knows, it may come down a little bit, but I'm keeping this 92 as my number here. If you want to raise yours higher, of course you can. If it can stay above 92, I will buy a small position in my trading portfolio and I'm going to put my initial stop down here at 91.50 because I'm looking at this as a longer term trade, if it behaves, of course. So my preliminary stop here is at 91.50. If and when the ITB can break above the 200-day moving average, which is now coming in at 102, if it can break above that, at that point I will add to my position, and my stop will be a trailing stop. So you may want to put the ITB on your watch list for the coming week. Now, speaking of last week, we talked about the HYDR last week. I said if it stayed above 36, that it might be tradable. Well, it jumped with the market, and as I looked at it today, late this afternoon, it's now trading at $46.95. So the HYDR did a great move last week. It went up pretty much with everybody else. So that was great. I'm in the silver, the SLVR, which is the Sprott Silver Miners ETF I told you about last week. That's done well. We've been watching the IGV, the software ETF. It got hammered a couple of weeks ago and got hammered down to 74. Now it's up to 85. So maybe in the coming week I'll get a little bit of that, but there's so many earnings coming out. We're going to dive into, again, first quarter earnings season in the coming weeks. So I'm going back to the old trader saying, which is trade what you see, not what you think will happen. Because with everything going on, I don't think any of us know what's going to happen. Finally, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now's a great time to check out my timeless training programs. How to bottom fish like a pro down here, definitely one of my favorites. How to bottom fish like a pro is the perfect training to check out right now. In this program, I show you exactly how to detect with high probability that a stock or ETF is just about to reverse from a downtrend and move higher again. You'll learn how and when to buy, how to manage the trade, and when to take profits. Our new low price for this program is only $199. You should make that back pretty quick. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading to how to swing trade successfully, very popular, how to trade the trend to profits, one of my favorites as well, how to read charts, great for novices, anybody who wants to brush up, 3 winning setups, and again, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.